Yeah, well, I appreciate that, Dunnigan. And Rick is right. Typically, in markets in the past, the flow always goes to gold first and then bleeds into silver. I think we'll see that happen here. This is a very unusual time. And, the little boy who cried wolf in me says the same thing over and over, but it's happening in real time. And you can see it beginning to unfold. And it's the game that's been played on the Western exchanges is being slowly exposed. Slowly, we're seeing countries. We saw the largest delivery in the history of the COMEX and the May contract for silver. Today, the close, or yesterday, June 3rd close in Shanghai had silver priced at 36.36 an ounce. The arbitrage continues. We've talked at length about the level of effort that's being put in place by countries like China, who is the second largest. David Morgan tells me he thinks they're the first largest. That's what they told him when he visited China. But going all around the world and buying up concentrate in Doré and sending it back and refining it themselves. We've talked about all of that. To me, what's really interesting are the level of deliveries that we're seeing on COMEX for sure. That's something that's very, very, very unusual. And it's not something that we would typically ever see. It's happening in a very, very, very substantial way for sure. Everyone's been talking about gold, but ignoring in May. So yeah, I think that silver is one of these deals where you can see that the chess pieces are put on the board. And when we talk about a cup and handle formation, it mimics gold's cup and handle formation almost perfectly, with the exception of gold has broken through the base or the top of the cup and has gone up to the handle. And what we see with silver, it's right at the base, right at the tip of the cup to the handle part. And this is a long 14, 15, 16 year base building. That makes the move that much, potentially that much stronger. You can feel it. And the ability of the West to silly as it may seem, suppress the price of silver nakedly, if that's a word, or the naked suppression, is very dangerous right now when we see these deliveries and the amount of we're seeing it on the London Metals Exchange. When we see stuff come off Shanghai, it's that they're promoting and prompting their citizens through state-sponsored gold and silver acquisition programs to accumulate metal. In fact, just as a side note, we just saw that China has lifted quotas and increased them for the banks. The banks who are traditionally the ones importing the metal into the country, they've now increased those quotas. And we're seeing large, let me just see if I do, I may or I may not. I read it the other day. I thought I jotted it down. I may not have. But huge amounts of gold and silver delivered into China. Here we go. Well, for gold, they bought 30 tons of gold in March, five times more than they officially reported, according to Goldman Sachs. This follows the purchase of 50 tons of gold in February, 10 times more than they reported, according to Goldman Sachs, and 127.5 tons in April. Well, buying up every ounce of silver that's not nailed down. And that's one of the reasons they're going to lengths to buy Doré and concentrate, which disintermediates the market, which makes it impossible for us to say just how much silver they're really buying. But ask yourself, if a $33, $34 price was real in terms of its value, why would they be going to such great lengths? Eric says they're buying up everything they can, playing the long game. Hold tight, all you silver stackers. We will have our day, is more or less what Eric is saying. And I agree with that. So finally starting, I think, to get noticed, and even noticed by the central banks and the big traders, it appears. So, we've been waiting a long time for it, whether it be the technical formation, the amount of deliveries, or the central bank purchasing. All three things are at the highest level, point to silver finally starting perhaps to get that big push above 35 into the 40s. And from there, it's really, there's very little of any resistance above that. And it's crazy with gold at 33.80, the 200-year average roughly of even 45 to 1 would put silver conservatively at $75 an ounce. And that would just be the average price of literally last 150, 200 years. It's coming out of the ground at 6 to 1, which would put it at near $400 an ounce. So I'm not saying we're going to be there tomorrow, but what I am saying is, from an asymmetrical standpoint, not only have all of us realized what a value silver is, no matter how difficult it is to hang on to that conviction in the light of same thread. And so I would expect, based upon the positioning, the deliveries, the right now, the 36.36 closing price yesterday in Shanghai, the arbitrage, everything is pointing towards an escalating silver price into the fall. I think silver is not too far behind it. And that's the pattern it's followed for all of time. There's a 90% correlation in their movement, but not always with perfect symmetry. And to Rick's point, silver goes first, silver catches on. And it appears that we're right at that level, right at the time when a lot of the retail investors have, kind of lost faith in silver. And I understand that. And quite frankly, that's that's a compliment, if you will, to the manipulators who have done a very good job, but through counterintuitive price action and by holding it down in the face of gold accentuating, there's been a lot of people who are just exasperated with silver, and that is another contrarian indicator. When they've held for this long, they see things brewing and growing and accentuating, and just through exasperation and just being exhausted by trying to stay positive and focused, they give up. So yeah, I honestly am quite bullish on silver, maybe more so than I've been in a while. Well, it closed, I haven't seen today's number, but it closed yesterday, June 3rd at 36.36, up $2.70 or 2.75%, rather, I'm sorry. And so, yes, this is what they do to entice the sophisticated, traders who have the ability to buy in the West and deliver in China. It will never come back. But if you're dealing in 5,000 lot increments and you're dealing in 100,000 ounces or a couple 100,000 ounces, if you're making, and that's kind of what Eric's point was, is that the Chinese understand this game. They're playing the slow, long game and have been delivering. And that's why they're buying up all the Doré and the concentrate, because it masks their real endeavor, their real aspiration. And his feeling is that, and this guy lives in Hong Kong, he's spot on. And he says, look, they're playing the long game to secure enough silver, which is strategic in nature, in my mind, not industrial as we're led to believe, in what is really highly dependent on silver in electronics and batteries, in military, in so many, not to mention monetary. Now, I don't know that we'll ever go back to a bimetallic system where gold and silver back the monetary system. But I do think that the realization that silver is very important, that it tracks gold regardless of its monetary status, as something very, very important. One of the things that we've seen with gold and silver going higher is that the non-commercial interests, that would be the hedge funds in particular, have really not participated too much. And it just seems as though, looking at their participation, that it's starting to move up. So you have the central banks that have been buying, and then the non-commercial players that really haven't been too deep into gold and silver. That looks to be changing on COMEX as well. Everything is pointing towards, we'll see if it has the follow through to continue going. It was pretty much flat today, but it's holding. And one of the things that I've noticed with gold, and we'll see how it plays out with silver, is that anytime it gets near the 200-day moving average, there is a slew of buyers who come in and support it. When you look at gold from the context of the way that I used to view it, then again, if 3,500 was the benchmark that we finally touched and then it got slammed, it would be slammed and wouldn't come back for the next decade. If as Rick says, past was prologue. Well, I think what we see right now is this divergence in the relationship between gold and other asset classes. Gold is taking on a life of its own, and silver will follow it. I think gold is being realized as being something where access to it is far more important than the yield that we receive on it. And that access, to me, is something that much of the world is saying, that's why we're seeing so much of the world accumulate this stuff. But it seems to me someone within the Trump administration, or some people within the Trump administration, have alerted President Trump to this fact. And you can see by what's happening on COMEX and the deliveries, just how relevant people in this country, for the first time that I can remember, are viewing gold and silver. And so that's also a very bullish sign for what's coming next. And say, I got a guy in my lobby who wants to sell 300 gold eagles. Can I offload him on you right now? Sure, you're locked in. And we will hedge that. And so you're right. That's a very intuitive point, in that, to some degree, unless you're up on some of the larger companies, you are the liquidity of the dealer, of the coin shop, is more important than just about anything. If they don't have the access or the ability to write a check, a large check, to buy stuff back. And in a volatile market, if you aren't hedging it, in a very, very volatile market, you can buy stuff, have a conversation with the person before he or she leaves the shop. It's a combination of lack of hedging at that level and lack of a large checkbook. But yes, I think that unequivocally would be something that you would expect to see, and see these companies kind of fall by the wayside, unfortunately. The environment that we find ourselves in now is foreign territory. I've never seen anything like it, honestly. I mean, there have been a few times where there were premiums like this for a very short period of time, but I have never seen anything like it now at all, ever. At a time when we have the largest deliveries in the history of the COMEX market, month over month over month over month, and the traders above all of us are laughing and saying, the suppression has worked. The suppression of narrative and of rhetoric has worked. The suppression of price has worked. The belief that, the road to retirement is paved with stock certificates, mutual funds, and cryptocurrencies has worked. They're buying it and using the suppressed price, even though it's gone higher, the mitigated price, to stand for delivery. The people in this country haven't. And as a result, when Rick says 0.5% allocation to precious metals in this entire financial matrix in gold and gold-related equities, not just physical metal, but equities too, says a lot. And it says, everything I've ever said to you about the little man rule, where the little man always is late to the party and typically loses because the big guy who's closest to the information, forget about the wealth, that's a given, but the information puts them in a place to where they are able to pickpocket the world's commodities, in this case, with no fanfare, with no competition, at pennies on the dollar and a subsidized price. Grain in the West, but they control the price on COMEX. That will change with the development of the grain exchange. Well, they know what we're doing with the metals prices. That's why they're building the BRICS Metals Exchange. That's why Shanghai has the cumulative volume of Shanghai gold and silver exchanges has surpassed that of the COMEX. The world is wise to what we're doing. That's why they're arbitraging with a 36 closing price yesterday to send as much as they can because they want it at any price. The people in this country are asleep at the switch. And so you have dealers that are literally loaded with product. Here's a good example, right? So right now we're selling backdate gold eagles. Let me just look and see, because oftentimes I have a bad habit of selling things lower than we have them listed for on our price list. But let me just look at one thing right here, just to make a point, if you would be so kind. So we are selling backdate gold eagles for less to the public, for less than we can buy 2025s for. So imagine you're a primary dealer who has an obligation to buy all of this stuff, not only 2025 eagles, but maples in all different sizes, and platinum coins and silver coins and Philharmonics and Kangaroos and Britannias and Krugerrands and all of this stuff. You're buying brand new stuff, and yet you're selling the backdates for considerably less to the end user than you're paying for the brand new stuff. So premiums are ridiculously low, and I've never seen it like this ever in my career. So to his point, look, we were paying, and what we see right now to me is an anomaly, and it is a function of the public really having very little awareness of what's happening, and the ability through suppression of price, through volatility of price, and through all of the other markets getting so much fanfare and attention that the lack of demand in the retail space has created an environment where dealers are bidding spot or lower on many things, American Eagles really being the exception. But you shop around and you'll find that our bid prices are typically higher than everyone in America. This is an unusual time. He's right now. Yes, you buy over and you're getting basically under. It's never been that way in my career. And unless you think things are completely different and will be this way forever, I would say this is just an anomaly, if anything else, because when the public wakes up in 2023, so have patience. It is an anomaly. It is the case right now. But if I were to give you a timeline of the 35 years I've done this, probably 34 3/4 years, it's not been that way. It is right now. I don't think it will stay that way. I truly don't.